Hi, Chris Finos. Thank you for joining us today at Interactive Investor and to talk about your new project, Haven.
Haven is a digital currency platform. We call it digital currency as opposed to crypto. We will be offering over-the-counter OTC services, custody services, and also research, so investment-grade research. The difference from the Haven platform is that it's a regulated platform, and that's something new to the market. The way we set up Haven was that we looked at it as in problem and solution. We didn't look at it, we're not a tech-led firm, we're an investment banking and trading-led firm. And that DNA difference is very, very important because from our perspective, we look at it as an end user, we look at it as an institution, as a wealthy individual, as a family office rep, as an advisor to one of these parties. And what is it that is stopping me from investing into digital currency? And at Haven, we sought to eliminate each one of those problems to create a safe space, a haven for people to trade.
I get it. What about the competition? Do you see Fidelity getting into, they have a digital asset platform that they're going to be setting up.
Julius Baer, we heard today.
Julius, Swiss Bank.
Swiss Bank. You correctly identified our competitive set. Our competitive set isn't Coinbase, BitOasis, Kraken, and the other retail exchanges. Our biggest competitor will be, and we're fortunate that banks are struggling with regulation, they're struggling with how to deal with crypto. For example, if Barclays set up a crypto trading desk, if JP Morgan Asset Management set up a crypto trading desk and their own assets, their own clients could trade the asset class via their institutions. They can't. They're all grappling with what to do with crypto, all the press that comes out, the Quadriga news of the other week. It all adds to that uncertainty for big banking executives.
Being regulated in Abu Dhabi, is that an equal to being regulated in the United States of America or inside the European Union? Why not?
No, we did a check of the regulatory framework globally. We wanted to build a regulated platform. We didn't choose Abu Dhabi because we were based in Dubai or we're based there. We went around, looked at the Monetary Authority of Singapore, looked at the US different state legislation, because in the US it's more state-based. FCA, not there yet. FCA governs, regulates cryptocurrency. If you are debt, you are treated, if you're debt-like, you look like a debt instrument. If you're equity-like, you're an equity instrument. They don't have a crypto framework. They're trying to push the crypto into an existing framework. FCA, I'm talking about FCA. And I think you're also in I've read some of the press that you've written, and there seems to be a little bit of, it's still consultation, there's still uncertainty. They haven't pressed the button yet. There's now a retail consultative process that kicked off recently. The Abu Dhabi global market has one of the world's, in fact, the world's most advanced cryptocurrency regulatory frameworks. What they have made us do, and our application is still in process, ensures that
go through by end of March?
We're anticipating over the course of the next 1 to 2 months. But we have just applied, so I can't sort of give any indication of if we're successful or not, but we are in discussions around that. This framework is designed to ensure that if I'm going to take your money into custody, I need to have certain checks and balances in place.
So do you have a kind of a queue of customers, of clients, potential clients knocking at your door?
Of course we do. So for any exchange to succeed, day one, it must have liquidity. So when you look at what institutions want from an exchange, they want security, they want liquidity, so they want to know that they can buy and sell large volumes easily and efficiently. They want to be able to convert that money back into the fiat system. So cryptocurrency exchanges over time have struggled with the conversion back into fiat because the banking system is a dollar-based system, AML, KYC. I saw the money came from crypto, I'm not passing that dollar payment. By us being a regulated entity, we bypass that issue because our regulation is the same as another bank's. So any payment coming from the Haven system has already been cleared. We check our cryptocurrency using something called chain analysis, where we step back through the blockchain and see whether that crypto passed through any wallets that are in law enforcement watch lists, any dirty wallets. So we do checks on both the fiat and on the crypto side to give our customers the safety and the security of knowing that when they step into the Haven platform, any person they find in there has been vetted and approved by the Haven platform themselves. Their money has been cleared, their digital currency has been cleared. We have been hearing from our private banking colleagues that in internal research, around 27% of their customer base is looking for access to digital currency. But let's run a scenario. I'm a private banking advisor and you're my client and you ask me, where can I get, hey, I've heard about Bitcoin. Should I buy some Bitcoin? If my platform doesn't sell Bitcoin, I have to say, hang on a sec, here's some research. There is no research in the market currently about Bitcoin. The research that's in the market is more marketing style research where the CEO of an exchange is talking about Bitcoin at 50,000 and then Jamie Dimon's talking about Bitcoin being a complete scam. At Haven, we're creating an investment banking grade research platform which will have price objective data on the big coins and on the industry as a whole. Our research is not written for the crypto world. It's not electricity rates in Belarus fell last week, therefore the hash rate and Bitcoin conversion. There'll be none of that. That's not for our market. It'll be analysis that says gold is a store of value. Some see Bitcoin as a store of value. If you were to see it as a store of value, here's potentially how you would value Bitcoin. If you're an alternative asset manager and you wanted to invest into cryptocurrency and you wanted it as part of a portfolio, here's some potential weightings and here's some analysis to how that would have looked over the last 12 months, 24 months, 5 years. It's analysis written for fund managers who are sitting and thinking, I might want exposure to that asset class, but I'm a little bit scared. Problem, solution. We are starting to bring cryptocurrency away from where it was into the institutional world by not revolutionizing anything, by not doing anything fancy, by not doing any tokens or anything overly crypto strange. We are simply creating a piece of infrastructure which we see the market as missing at the moment. Yeah. And we think that we have a gap of a couple of years before the big boys start coming in. And we're going to run as hard as we can to make sure that Haven is big enough, that we scale up fast enough, to make sure that when that day happens, when everybody else wakes up and says, hang on, it's not going away, and it is now an asset class, that Haven is big enough to stand on its own 2 feet. So that's our mission for the next 12, 24 months. Haven won't be the only regulated custodian and regulated OTC platform. Haven won't be the only platform giving high quality research. We don't want to be, we can't be. The market's too big for that. The more and more of us, then as that institutional money flows in, we'll start to see the volatility come down as the big boys are playing in this space now, and it moves away from being a retail market and into much more of an institutional market.
So my thoughts are about the possibility that the market doesn't recover. Do you see that as a danger for your business model? If the price of Bitcoin keeps falling, sure, that'll squeeze out the retail money and some of the hot money perhaps, but it will also lead to less interest from institutions. I know people keep talking about where the bottom is in the market, but some people might be right when they talk about sub 1,000 for Bitcoin. Would that be a problem for Haven?
From Haven's perspective, being a piece of infrastructure, I'm not beholden to Bitcoin. My platform doesn't live and die by Bitcoin. The internet didn't live and die when Netscape crashed in 1990, whenever it was, 98. Google was around in 2001 and that managed to survive. The others didn't. Bitcoin may well be the coin of the future. It may not be. The technology changes so quickly, and the blockchain and the distributed ledger and the efficiencies that that system has and the amazing things that all the crypto guys are doing means that Bitcoin might be replaced by something else. Haven is a play, from our perspective, on the survival of cryptocurrency and the growth of cryptocurrency as an asset class, not on a specific coin. Would we love liquidity to increase and maybe the price to appreciate? Sure, but I don't mind if the price decreases as long as there is liquidity in the market.
There's a stat that came out last year which suggested that around 1,000 people own 40% of the entire Bitcoin supply. If there are that many whales, well, not that many, whales dominating the market, then it's going to be difficult to overcome the volatility.
True.
If it's so tightly held. Yeah.
Yeah.
Do you see that as a systemic problem?
It's a big challenge, absolutely. There's also, to throw another little bit of fuel onto that fire, the drop in the Bitcoin price is affecting the viability of the mining operations. So the smaller mining rigs are being squeezed out of the market, and it's becoming more and more the bigger institutional miners are now the only ones left, which will add to greater concentration of Bitcoin as they generate the rest up till we get to the 21 million cap. There are rumors that the CIA owns half the Bitcoins. There are rumors, and it's very, very difficult to track and to find. I think all I can say from Haven's perspective is that the liquidity providers that we've been speaking to have significant amounts of cryptocurrency, significant amounts of Bitcoin, and they're now getting more and more sophisticated in the way that they trade it. We are seeing more portfolio managers at these hedge funds, the whole crypto. A lot of them are hedge funds. Their position is, I will put 1,000 BTC on the Haven platform and I will trade that 1,000. So I'll be your liquidity provider, but I will buy and sell, and at the end of the day, I'll be back out at around 1,000. There are more and more and more of these, and it's so interesting to see them stepping away from where Bitcoin originally came from. And you start talking to gentlemen that used to run a fund, a pension fund, and now they want it to be a bit more entrepreneurial. They've moved in and they're now handling and running a couple of thousand BTC. There are enough of these people around the world at the moment to be able to create that liquidity that our exchange needs. Hopefully, the more havens that there are out there, the more it will entice the rest of the Bitcoins to come out of storage. Some say that 14% of Bitcoins are lost. There's all these juicy tidbits of information because nobody actually has the best data. There are rumors that Bulgaria owns a significant amount of Bitcoin. Yeah. So for example, we could swap little rumor stories all day. But what we're really seeing on the ground is institutional fund managers running Bitcoin portfolios and running them like we're used to seeing.
Well, thank you very much for joining us today, Chris, and good luck with Haven, which will hopefully be launching
over the course of the next few weeks.
Next few weeks. Okay, great. Thank you for your time.